Hi, Rebecca.
Hello.
Hello there.
Hello.
Hello, Charles. We'll be starting in a moment. So,
Good afternoon.
hello, Charles. Nice to see you here.
Very good
Hi,
to see you.
Charles. Good to see you. Rebecca.
Hi,
good to see
Lawrence.
you.
Hi,
All
Henry.
right.
Hi, everybody.
Good. So we're into our registration period here,
Okay.
and quite a few people are joining.
How's the mood in the US?
Hello, everyone.
Very tense.
Can imagine.
Earliest vote counting has come up with some numbers already.
Well, there's some also here very sudden breaking news about the whole IPO, right? Never a
Oh,
dull
yeah.
moment. Never a dull moment. That's what we can say.
Yeah. Anything can happen, that means.
Yep. It's the new norm.
We have learned not to complain in California. You
Well,
know, we complained and we got, and we complained we got COVID. Then we complained more, we got the fires. So we stopped complaining because we can have in Silicon Valley the earthquakes and the mudslides and then the locusts. So I stopped complaining long time ago. It could be always much worse.
Yeah, we were told those will go away, right?
Yes.
So this is Michael. Can everybody hear me okay?
hi, Michael.
Yes, yes, we hear you
Morning.
fine. We're going to be starting in just a moment here.
Okay, that's
So
good. Just testing.
good, good. Quite a few people are joining up.
Hi, Charles.
Hi. How are you?
Fine, thanks.
So we'll give it a few moments for our registration period to end, and then we'll get started here.
Okay, no problem.
Good.
Rebecca is the reflection from behind me, okay? As I mentioned
Yes,
to you,
it's
I'm
fine.
going around my sister's house
It's
to
very
find a
good.
place without the dogs.
It's
She has
it's
two
very
puppies
good.
and they're so excited to see me.
Okay. Well, it's never a dull moment. I appreciate everyone being here, and Kamran, you particularly, and today coming in from unexpected circumstances.
No problem.
So, okay. Well, look, everyone, we're going to get started here. So thank you for joining us. And we have our Silicon Dragon online series today. And we have a great program lined up for everyone. So if you haven't joined one of our programs in the past, here's all of the materials that you could ever want to know about Silicon Dragon, including the books and our website and our mobile app and our speaker series, which of course many of you are joining now. And we have a great program lined up for you today. You can see all of these people who are pictured on this slide are going to be speaking. So we have Charles Ng, we have Jeff Chi, we have James Me, Edith Yeung, Michael Chan, Olivia Wang, Kamran Elahian, two pitch candidates here, Irene Chiu and Michael Chan. So it's a great, great lineup. And thank you very much for joining us. So today we're going to have our program, which consists of a VC panel, a keynote first, and then a VC panel, and then the two pitches, and then an IPO panel. And as we know, there's been some news today on the IPO front. So that's going to be really interesting. That'll be our last panel. And if you have questions, you can type them into the chat box. And then we're going to have a poll later on as part of our series. So you can answer the poll, and it's anonymous. So don't worry about, anything crazy you might say on the poll. And then we always do a toast at the end. So we have our toast all warmed up as well. So again, thank you everyone for joining us. We've got a big crowd today, and I'm going to next introduce Charles Yeung from Invest Hong Kong. Thank you, Charles. I'd love to hear some remarks from you about your participation here, and certainly we've known Invest Hong Kong for many, many years, and I've known Charles for many, many years too, and we always appreciate the support of Invest Hong Kong. So let me just stop the share here and let Charles join us and say a few words. Hello, Charles.
Hello, Rebecca. Hello, everyone. Good morning to you all in Hong Kong, and good afternoon and evening for those of you in the US. Rebecca, I can't thank you enough for really spearheading and championing this Silicon Dragon event and series that we,
Sure.
as you've said, we've known each other for more than 10 years.
Yep.
And it's been great to see how the program have gone from strength to strength, and the type of marks that you've made in Hong Kong and in China, in this part of the world, in terms of fostering the whole innovation and funding initiative. So we all know from the impact of COVID-19 has been far-reaching, impacting economies, businesses, and people from all walks of life and from all corners of the world. But we are confident that we will all emerge of this, despite of all the black clouds over the head, and Asia will be the engine for global recovery. And indeed, China is already leading the way, as we've seen from the facts and figures. Against this background, I think that it's really appropriate and relevant that the Silicon Dragon Hong Kong 2020 Tech Titans will highlight the issues and opportunities in funding and scaling up the US and Chinese companies to reignite growth, build trust, and financially empower the society and businesses in the post-COVID era. I think we have to think beyond what's the COVID, and we are looking at that. It is a clear opportunity that, of course, it's clear that the time of great opportunities, despite of the challenges. Hong Kong, as we all know, is at the nexus of mainland China and Asia, the regions that also is part of leading the world in many ways in technology, innovation, funding opportunities, and market opportunities. Hong Kong has always been, is becoming even more and more a vibrant innovation and technology ecosystem. Rebecca, when we started this discussion, we were we've come a long way, and thanks a lot to your contribution as well. The government has poured over $12 billion US in supporting the development of innovation and technology. As we all know, we've had now the birth of 8 unicorns built up in Hong Kong in the past 6 years, with 500 over equity and venture capital firms, with 15 of the top 20 PE managers in Hong Kong being the #1 asset and wealth management market in Asia. The last figure is over 84,000 plus ultra net worth individual families in the Guangdong, Hong Kong, Macau area, dubbed as the Greater Bay Area, just north of Hong Kong. And this is something which is very important. And of course, we have a very healthy IPO market. I don't want to steal the thunder from my colleagues who will be talking about that in a few minutes. But suffice to say that we're well positioned to help shape the funding journey of many tech titans moving forward. And of course, Hong Kong as a premier location offers a trusted capital market for tech titans and innovative companies to reach a broad range of investors to help fuel the business growth. And with that, my colleagues in San Francisco and New York and all of us in Hong Kong stand ready to support all of you and all of you who are exploring opportunities in this part of the world. And we'll be very happy to connect you with the great friends and network here that you're looking for. So with that, I'd like to wish you all a fruitful discussion this morning and look forward to meeting you in person in Hong Kong next time you visit Hong Kong. Thank you very much.
Thank you, Charles. I can't wait to get back to Hong Kong, and really appreciate all the support over the years from Invest Hong Kong and the Hong Kong community as well. It certainly has grown a lot. And I remember us starting out on this journey, about 8 years ago now.
Yep.
And so it's been a very interesting time. And thank you again, Charles.
Thank you very much for having me, Rebecca. Thank you.
Okay.
All the best
All
to
right,
you.
thank you.
Thank you.
Now I'm going to segue into our next part of our forum, which, as I mentioned, we have our program here with all of our wonderful speakers. And then we have just heard from Charles. And I'm next going to be introducing our keynote speaker, Kamran Elahian, founder and chairman of Global Innovation Catalyst. He's here in Silicon Valley. I've known Kamran also for quite some time. In fact, I think back when you were creating some of these high-tech unicorns, Kamran, I remember interviewing you back when that was happening. And this was, really another very interesting tech time when tech was exploding. And also, I know that you have also run a VC firm, Global Catalyst Partners, for 15 years, and you had a number of successes from that. So Kamran, I know that you're a wonderful speaker. I've heard you speak before, which gave me the idea that you could address us and talk to us about some of the new ideas that you're seeing today in the tech world and the world at large. So Kamran, let me bring you on to the screen here and welcome you. Thank you, Kamran. I know you have some slides to show as well, so thank you.
Thank you, Rebecca, and hello, everyone. It's wonderful to be invited to give a talk and share some ideas with all of you. And I know tonight is the election night, so many of us have forgot a lot of other things that we are involved in, but I could never say no to Silicon Dragon, and Rebecca and the team have done a great job. So thank you for the invitation. What I thought it would be good to talk about tonight is the innovation economy. We see so many challenges and so much chaos around us, and it would be good to look at it with a different filter. You might say, what is really, just a second, let me get my slide to move forward. Okay. In terms of her background, as Rebecca said, 25 years I was an entrepreneur, 15 years at a global venture capital fund. And for the last 24 years, my wife and I have been doing a lot of global philanthropy, working in over 40 countries. But the last 5 years, I've been an innovation catalyst. And what I've seen has been the emergence of innovation economy. You might say, what is innovation economy? We are all familiar with agricultural economy, which was followed by industrial economy. 20th century brought us the knowledge economy. What was particularly important about knowledge economy was because all you needed was having a great brains and a high level of intellect and coming up with ideas. It was for the first time on evolution of our species that women had a chance, equal chance as men, to go and participate in knowledge economy. Within 21st century, by the beginning of that, around 20 years ago, with the emergence of broadband internet, again, there is an inflection point. It is for the first time the youth have a chance to have significant advantages over the incumbents. And I will describe that a bit more for you. Many people ask me, what's the difference between innovation economy and knowledge economy? Knowledge economy was all about ideas. And you would go, as soon as you had a great idea, you would go and keep it secret as a trade secret. You would apply for patents. You would go and do many, many things to protect that idea. And that was your main key thing. Intellectual property, value of knowledge is so important. Well, that was knowledge economy. In innovation economy, Ideas come a dime a dozen. Because of spread of broadband, because knowledge is diffused all over the world, many people at the same time come up with ideas. And having a good idea is not so important anymore. What is important is what you do with that idea. And even more important is to use that idea to disrupt the status quo, completely interrupt everything, disrupt everything, and go and come up with a whole new model. If I had to describe innovation economy in one word, I would say disruption. Now, if we look at this pyramid, it says that every task that we do in creation of value goes through this pyramid. And if we use the tools at the higher end of the pyramid, we will have ability to generate more value and generate more wealth. But every task in every geography goes through this pyramid. Let's look at the field of finance. Here is finance being done manual. This is finance using the mechanical tool. Here is electromechanical tool. With the calculator, the first microelectronics usage, the world of finance was changed. When the software spreadsheet came along, it completely revolutionized the world of finance. But if you want to be really active for the future of finance, you need to understand the algorithmic content. And where is the future of algorithmic content in the world of finance? Is all distributed blockchain. Let's look at another way. Every time that you are looking at the situation on any task, the job of innovation is to figure out when we can go from each one of these levels to the next one. And as an entrepreneur, if you see that, you could come up with unicorns. However, if you are ahead of your time, you would have failures. And that's part of the category. Many times people say Kamran has had 3 unicorns. Well, that's 3 out of 10. I created 10 companies, 3 of them failed. 6 of them were successful, 1 of them is a zombie. Thank God, of the 6 that were successful, 3 of them had IPOs and they were all multi-billion-dollar IPOs. But we should not forget the 3 failures, and I got fired twice. So the world of innovation is not always success. Your ideas, no matter how great they are, they might work or they may not work. Let's look at the field of education. That's manual. With Gutenberg, we got into mechanical tools for spreading the knowledge. Electromechanical printing press was phenomenal. With emergence of microelectronics, we were able to put thousands of books in a PC. When broadband started to come, we had the use of software and the online courses. Emergence of MOOCs revolutionized the field of education. But today, if you look at it, because of broadband, because of very high-speed internet that is available, and with the emergence of low-orbit satellites, actually, this is going to be exponentially changed. We are having every article, every book, every podcast, every video, every MOOC, everything available out there. And the job of education is not to teach. It is having some sort of algorithmic content that allows you to learn the things that gets you the goal that you want to achieve it. And it's not the traditional school system that you go through 12 years of elementary school, middle school, high school, followed by 4 to 8 years of graduate school. You can go through all of that and come out and not have a job. as we see over and over and over. So the job of a teacher is being changed to first and foremost help people learn, and help them learn following some sort of algorithmic content that could be aided by AI and a human being as a coach, as a mentor, helping with people learn. As we have seen in the last 20 years, this pyramid has become inverted pyramid, and it's going to be more and more top heavy, and less will be done manually or mechanically or electromechanical. The robots are going to do all of those jobs. So anybody who is coming and telling you I'm bringing the old manufacturing jobs back or whatever is either stupid or is not honest and telling you the wrong things. The future is all about how to use the leverage of software and algorithmic content to go and generate value and generate wealth. Now, if we look at the highest value companies 10 years ago, the top of the list was Exxon, followed by PetroChina, Walmart, China Mobile, Procter & Gamble, Microsoft, ICBC, Johnson & Johnson, AT&T, December of 2009. 10 years later, December of 2019, the world had changed. It was dominated by Microsoft, Apple, Amazon, Google, Facebook, Alibaba, Tencent. Exxon was still there, Johnson & Johnson was there, but at the bottom. And actually, after COVID, Exxon has even lost more value. So the world has changed, and that pyramid really applies. Everything that you see highest value is how you take advantage of software and algorithmic content, which is the basics of artificial intelligence, basics of big data, to go and disrupt doing things the way we did it before with a whole new ways. And because of the broadband and this diffusion of knowledge, the world has changed significantly. It used to be that if you wanted to have a unicorn, you had to come like I did to Silicon Valley, live in here, and do everything in here and create global companies out of Silicon Valley. That was the 80s and the 90s and early 2000s. Here is a subset of the list of the global unicorns. And this is by no means a comprehensive list. I just went through and found a whole bunch of unicorns all over the world and put it there. Reality, I'm sure I'm missing many, many companies out there. So the world has changed big time. Now, we have had COVID. What is the effect of COVID? All it has done, it has actually exacerbated. It had made acceleration of move towards digital to become exponential. That pyramid that I showed you is exponentially changing, and we are moving towards the top of that. And look at how we are having our conference right now, and how Zoom using algorithmic content allows us to do video conferencing in the ways that the previous versions of video conferencing software could never do. And when we look at the effect that COVID has had with deployment of technology, whether it's telemedicine, teleworking, teleeducation, everything is changing. And with that, we have to look at where are the jobs of future and what sorts of hard skills and soft skills we want to have. So if again we look at that pyramid, the top of pyramid is software, and I'm not going to tell you what type of software courses you have to take, all of that. Absolutely, there are many better experts who can help you with that. And even though I have a few degrees in computer science, they're all old stuff. So don't listen to whatever I would tell you. However, in terms of algorithmic content, to do algorithmic thinking, to do AI, you don't need to wait till you would go to a place like Carnegie Mellon or Stanford to get a PhD in AI. It actually is available at K-12. Look at this company called Polyop that we have been a supporter of that for about 5 years now, a spin-off from Stanford, and is bringing the power of robotics, AI, and the hard skills of algorithmic thinking to the hands of children. Polyop.com, check it out. It would blow your mind what kids are doing at such an early age. And the basics of university has changed. University of the future does not have individual silos like engineering school, business school, design school. They all have to come together. These skills have to come together because engineering alone is not good enough. Many engineers make many products that never sell. I had a few of those in my engineering days. When you combine it with business, you could have some good products, but unless you bring the elements of design there, you might design something that to just turn on your computer, you need to have 3 fingers and use Control Alt Delete just to get your computer started. When you bring the element of design, user interface, creativity, art school, then the things change and you can have products and services that bring these 3 elements together, prepare you for the jobs of future. And some of the countries have recognized this. They create these tech hubs within universities. Many other parts, these technology hubs are springing up all over the world. You have seen quite a bit of that in Asia, in Europe, in US. You might not know, in Africa, this is actually a year old. Today, we have close to 1,000 tech hubs. These are the partial list of tech hubs in Middle East, in Egypt, in Morocco, in Lebanon. The world is full of these tech hubs, and these are the job creators of future.
Yes, and Kamran, as you as a global venture capitalist, you're very much aware of how this whole tech and venture scene has exploded globally. And it's very interesting to see even there in Africa. I was just invited to be a judge for a competition in Botswana for startups. So that's pretty exciting.
Yeah, before COVID, I used to go 4 times a year to Africa. And the Africa that I know is full of very, very advanced high-tech people. And it is totally different than the Africa that UN knows and talks about, or World Bank or IMF talk about. The Africa I know is unbelievable, the digital Africa. In terms of soft skills, we have to have a lot of skills that are very different from fixed mindset to move into innovation mindset. With fixed mindset, you're afraid of change. Innovation mindset, you strive for change. Fear of challenge, you look at it with innovation mindset as opportunity to learn. Fear of failure, you look at failure as a stepping stone to success. Success is management of failure. What you learn from it allows you to go to the next level. It tells me my time is almost off.
Yeah. Let's see if we have any questions.
Let me just finish that one more thing.
Okay.
Fear of feedback.
Good.
And feedback helps us grow. And in fixed mindset, you're jealous of other people's success. In innovation mindset, you're inspired by their success. In fixed mindset, you keep your ideas secret. Here, you share ideas and collaborate. And one key thing in here, if you look at the innovation mindset, that is very important to note. The things like overcoming the fear of failure and looking for change, that's what gives the power to the youth. The other 2 things, such as sharing of the ideas, and collaboration and doing multiple things at the same time gives an advantage to women. This is the first time in evolution of our species, I will tell you, young women are going to play a major role in creation of the innovation economy and the jobs of future. So the world is changing, and I'm not saying that you should invest in women and you should spend out of charity. I'm saying this, that it is a good business. If you're a smart person, you better get off your butt and go and support the female entrepreneurs. Thank you very much.
Thank you, Kamran. I really appreciate that. So you're ending on a high note there. You're making me feel very good. So I think we should see if there are any questions, but if not, we'll move on to our next segment of the program. And okay, well, Kamran, thank you very much. That was very interesting. And we'll just move on now to the next segment of our show. And moving right along. Again, everyone give a thumbs up to Kamran and clap.
Thank you, dear.
All right, thank you.
I will have to say goodbye quickly because I've got the EdTech conference that is coming up in a few minutes, and I need to go and participate on that. But wonderful to see all of you, and let's follow each other on LinkedIn and friend each other, and that would be lovely to stay connected with all of you. Okay. Thank you all.
Thank you, Kamran. All right, moving right along to our venture capital panel. And we are going to be really focused on an outlook for 2021. I think all of us have had enough of 2020. I certainly have. So I'm looking forward to 2021. And so for today's discussion, we have James Mee of Lightspeed China, Jeffrey Chi of Vickers Venture. Actually, James is tuning in from Shanghai and Jeffrey is tuning in from Shanghai. Then we have Edith Yeung from Raise Capital here in San Francisco, and Duncan Chiu from Radiant Venture in Hong Kong. And finally, Olivia Wang from ZhenFund here in San Francisco. Without further ado, why don't we get started with our discussion with the VCs. VCs, are you all ready?
Yes.
Yeah.
Okay. So you can turn on your videos now, or your video screen, so we can see you. Hello, Duncan, how are you? I see your nice Hong Kong background there. All right. Do we have everyone else lined up? There's Edith, there's Jeff, there's James, there's Olivia. Okay, we got everyone. Thank you. Well, look, it's I'm pausing to catch my breath because it's just been so suspenseful these last couple of days with the election coverage, and then today news out of Ant Financial or Ant with the IPO, and it just we're just rocking and reeling here, I think. It's kind of a chaotic time, and I'm just wondering, how do the rest of you feel? What's a kind of what's your mood like? I guess people want to know what's our mood like here in the U.S. over the U.S. presidential election. But what's your mood like as a VC today? What is are you optimistic about tomorrow, about next year? Are you glad to get 2020 kind of behind us? Just what's your mood? So Duncan, since you were here on the screen right in front of me, why don't we start with you? And we'll start with Hong Kong.
I think everyone is planning post-COVID now. Like you said, I think 2020, a lot of people want to just forget it. I mean, for us, we keep investing, but we actually started to be quite conservative earlier in the year. When in the beginning of the year when COVID starts, we slow down. Then I think in terms of deals that we are investing, just like many other VCs, I think there's a lot of follow-up rounds on previous portfolio companies. On new deals, there's a lot of pipeline. In Hong Kong, I think is actually a quite split in the market. I think the later stage company, they still raising money without a problem. You know, company approaching unicorn size and post unicorn, as long as they are not too aggressive in valuation, they have no problem closing. For earlier stage, it's actually quite greatly impact. So a lot of the earlier stage in Hong Kong are still backed by personal investors and angels, and these people most likely they are more conservative, and it's quite difficult for the earlier stage company to close a round this year. So for them, it's actually a big delay. We call it gap year for the earlier stage companies in Hong Kong, and for us as well. I mean, we become more cautious. We want to look into companies that actually shows revenue growth, or at least stable business. And for some of the earlier stage companies, is getting harder this year.
Okay. Okay, good. I mean, not good for early stage companies, but maybe later stage companies are pulling through. Edith, from your perspective, since we've heard from Hong Kong, why don't you offer us your Silicon Valley perspective?
Rebecca, I'm Hong Kong too, born and raised, but of course I'm in San Francisco. Yeah, like this year, I can't wait for this to be over. But when COVID first started, I actually have a very interesting conversation with some of my friends, investors in China, more or less just to learning from them during SARS, like 17 years ago.
Oh yeah.
How long did it take for them to recover?
Right.
And
I remember that period very well.
yeah, I fell off my chair at the time. He said 2 years.
Oh,
And
yeah.
like 2 years, and I think that probably will be the optimistic case for what's going on in the U.S. because U.S. is still don't have this whole COVID situation under control.
Right.
And unlike China, actually China, at least Chinese government and Chinese as a society have experienced this before, and U.S. have not. So. But having said that, it was really interesting in terms of venture capital and investment, and just sort of all the deals that we've been looking at. Focus in, I don't want to even say Silicon Valley. We started to have keep track of all the companies that we've been looking at, have an index of distributed or not. 99% of all the deals that we've been looking at, and we looked at over 300 deals this year. 99% of them are distributed. So the definition of location, it doesn't really matter anymore. And then what's really interesting, thanks to COVID, and Kamran said that earlier, COVID is really an accelerator for a lot of the technology that's been around, right? Unlike China, telehealth or healthcare, actually really, there's no telehealth really because people really resisted it. Now is some of the hottest, area that is getting a lot of funding and investment. Anything video related, of course, the leader is Zoom, but Agora, which my IPO this year also did really, really well. Their revenue this year is last 3 years combined. So I think in the space of collaboration, in the space of healthcare, online education, those are super hot in terms of just because it's such an industry that is in need, regardless of where you are in the world, and particularly in the US.
Okay. All right, very good. James from Shanghai.
Yeah.
Welcome. Thanks for joining us.
Sure. Very happy to be here. I think it's, if you're asking me about the mood, I think it's very anxious today. I think we are all looking forward to finding out the election results in the US. I think that will have definitely a very significant impact, not only in the US, but in China and also for the world. Edith was talking about what's happening in the US, and that Duncan talked about in the Hong Kong. I think in China, we have actually been back to office since February 10th. So fully operating.
Oh,
And,
wow, since February 10.
That's right. That's the day
Wow.
we had a one CEO presented to the whole team in the office with the face mask.
Oh, really.
So, and also the definitely the investment pace was slowing for the first quarter, but in the past quarter, things has really picked up. And not only in the later stage, but in early stage. And this week, we had one deal. Normally, we had a deal team meet with the founders, and if it's positive, and we'll bring the founder to present to the whole team, and before we sign in the term sheet. And this week, because the competition for a first-time entrepreneur, this is raising a Series A, but the person hasn't left the previous company yet, and we actually have to sign the term sheet after the deal team just met the person without giving a presentation to the whole team. So the pace is fast. Everybody's trying to catch up. The business is pretty much, I think it's coming back to normal. There are many different areas, and we can talk about it. So it's very active.
Okay, well, it's definitely a fast recovery there. We're still in the midst of meltdown here in the US. Olivia, let me bring you in. And I know you have experience from both sides, US and China, like Edith has experience in both sides, Hong Kong and Silicon Valley. So tell us, what your answer to the question, what's the mood like for VC today?
Yeah, I just got back biking to Menlo High School and dropping off my ballot. So we'll see what happens tonight.
Okay.
Yeah.
How long was the line?
It was very short. I found the system to be very efficient and I was very impressed. But I think it's also a reflection of how many voting centers there are in South Bay right now in California. So that's been great. I stepped off at my full-time role, head of US of ZhenFund in an advisory role, and I'm still full-time managing our portfolio of over 60 companies in Silicon Valley. And so when COVID hit, we got on the phone and really wanted to prep our companies and be there for a portfolio in preparation of a worst case scenario in terms of managing the burn. And I got on the phone and had multiple discussions with other general partners in Silicon Valley, thinking about, will valuations soften dramatically? How will the market react? That was March. And then the summer, I think it's been very surprising to me that the sentiment has been relatively robust, and we've seen extremely competitive deals being done at the seed and Series A. Even if you look at Clubhouse, this audio social networking that closed at, 100 million plus valuation, or Trove that came out of YC that, just started and closed at a $75 million plus valuation, even though there is, a softening and but everybody kind of sees a different part of the elephant being in quarantine here in America. I think, Edith and all of the panelists, James and Duncan, have all kind of very accurately described the general sentiment. There are a lot of VCs and founders moving out of Silicon Valley. So what Edith talked about with distributed teams, we've seen a lot. We've seen a lot of people move to Austin. And I made my first Austin-based fintech company this year, which we're really excited about. And we can talk about this later, but I think, Silicon Valley angels and the seed environment has changed a lot during COVID. There's the rise of the solo capitalists, right? Single GP structures of $50 million plus AUM that are leading rounds at the seed, Series A, and going head to head to institutions, as well as the AngelList rolling funds, which are, open-ended structures for seed funds that allows for the general partner to raise at a longer, timing horizon. Mm-hmm. So we're seeing so much dynamic kind of reinvention of what early stage venture is in Silicon Valley. And that is, I think, related to the continued robust sentiment and environment of seed stage in America.
Okay, well that's good. It does seem like we are in a very hyper innovative environment right now. The ingenuity of people has really bubbled up around the world. And so let me bring in Jeff Chi. Jeff, hi Jeff.
Hi. Good morning, good afternoon.
So
Hi.
Jeff, what's the mood like in at Vickers and in Shanghai?
You know, I think everyone before me mentioned quite a bit on the issues, technology being a catalyst for change, how China has really hit the ground running post-COVID, how the rest of the world is still coping. But I think the general sentiment these days is around what changes and what uncertainties lie ahead of us. I think you know, ranging from the U.S. presidential elections to this whole thing on the Chinese regulators coming down hard on or changing the financial regulation landscape and impacting the IPO, to living in a post-COVID era. I think we're all still coping with change, and I think Duncan used the word gap year applying to a lot of the startups. But I do think, you know, even though life goes on, it feels like a little bit of a gap year for us as well. Whereas we're trying to figure out what's changed and more importantly, what's not changed moving ahead into 2021. Your title says something about planning for 2021, what the outlook for 2021 looks like. You know, even though we're already in November, I think we're a long way from figuring out what the remaining of 2020 is going to look like. And so I think the general sentiment is really figuring out what the next few months has for us, and have that drive our strategy as to how to deploy capital in 2021.
Right. So up until Chinese New Year, maybe, kind of swinging through, or
yeah.
Yeah. Okay.
Hopefully
I mean, it feels like we're already at the end of the year. I mean, one of the reasons I asked this question is somebody mentioned to me the other day that they have just totally discounted this year and they're totally planning for next year. Forget this year. You know, It's over. We got to look ahead.
I can certainly get that, understand that sentiment, but I do think that like we've heard from all the panelists before me, that it's been a busy year, and somewhat fruitful as well. And I think part of the reason that it is the case is we are at the forefront of investing in companies that will shape how the future is going to look. And particularly in a time where that is very, very impactful as we come out of COVID. One of the things we have recognized early on, and I think Edith made this point about the 2 years, you know, I think it's not about when COVID will pass. I think it's more about how we're going to live with COVID and how things are going to change in that respect. It's you know, we do have a company in the portfolio that has it's a vaccine company that has the potential to eradicate the virus, and out of the 200 vaccine companies that are about on the cusp of starting clinical trials, I think only a dozen or so have that potential, but we'll see. I think these are interesting times, and I think history, when we look back in 2020, will have a lot to say about this year.
Oh yeah, for sure. So there's been a lot of talk about the decoupling of US and China. We've also talked a lot about how some of that investment is driving China capital to Southeast Asia instead of the US. And we've talked about how the US and China are becoming separate markets with their own technology standards and their own venture capital pools. I would like to get some comment from the panelists about this idea of where cross-border venture investment and technology is going, considering the tensions, the ongoing tensions, the pushback against investments. Jeff, you could lead, or James, or whoever would like to start.
Sure, let me have a stab at that. I think the tensions we've all come to realize that the tensions will go on despite whoever wins the presidency. This is one thing the Democrats and the Republicans agree upon, and I think will remain at the center of attention in their policies, no matter which party takes control. So the shift in the bilateral relations has moved and shifted from trade to one of I think journalists are coining it the tech Cold War, and really a battle for technology supremacy. One could argue that the U.S. economy is the global leader because of its position on technology, and China in the last 10 years, 5 to 10 years or so, has all of a sudden become a threat to replace the U.S. in that position, and hence in a very defensive mood, the U.S. is doing these things. I've been finding it hard to articulate this, and Kamran's speech earlier on this session really gave me an idea as to what sort of helped me articulate the thinking, which is his idea on in the old way of thinking and the new way of thinking, where there is sharing, innovations flourish, and innovation is improved. With the relationships going the way they are, unfortunately, I think we're taking a step back, and we're going into an era where, sadly, I think the pace of innovation is going to slow down. Not necessarily a bad thing from a geopolitical situation, but indeed, I think we are going to see, and certainly from an investment viewpoint, because we do invest globally, we are beginning to see that the friction in getting deals done is increasing. Specifically, having to circumvent, circumvent's the wrong word, but having to take into consideration CFIUS rulings, as what does that mean for investments. And again, this is going back to my view on overall sentiment, which is these are times with a lot of uncertainty, and we just need to be able to navigate that well.
Right. Okay, thank you, Jeff. But how is this changing the strategy of the venture capitalists here? How is this impacting the way that you do business, the way that you invest, the way you think about what types of investments you're going to be making? Is it making you become a more nationalistic kind of investor, or you don't really take that into account? Anyone, James? Anyone? Duncan? Edith? Anyone? Olivia?
Yeah, I think I agree with a lot of what Jeff mentioned. I think it's unfortunate. There's a lot of barriers being put up for cross-border collaboration and innovation. But it's also creating opportunities for startups in each region, because now there's more kind of a local solutions is required. For example, in China, not only happening in the Lightspeed China, but happened to many other funds, used to be consumer internet was the biggest investment areas for many of the VC firms. But now it's shifted. In many cases, vast majority of the investment focus is shifted to enterprise and deep tech. Part of the reason was because the demand was really being created. And certainly there's another part is the consumer internet, the mobile user growth is slowing, and the user acquisition cost is pretty high. So you really need to have a very disruptive model. So that takes longer. So that shift, that reflects into the fund's activities in these different sectors.
Okay. Olivia, in terms of strategy, and also Edith, from where you are, how are you seeing it impacting the way that you do deals?
Sure. So I think the decoupling of tech between the US and China, I think, can be reflected through ZhenFund's refocusing on the China market and thinking about Southeast Asia and other parts of the world. And I do think this is a time in when people have to really focus on a specific geography, or that is one strategy that some people are taking, while other cross-border funds are continuing to invest globally. And I think they've done a great job at doing that. I myself, during this time, have kind of doubled down and really focused on the US personally. And one thing I think a lot about is what does cross-border mean in a new era, and how will it be redefined? And so one thing I think a lot about is like sector by sector. For example, with healthcare and biotech, with China having over 480 million people reaching the age of 60 plus by 2050. And it's, it will still need to leverage a global partnership base for the development of biotechnology and aging. And I still see some cross-border collaboration there, for example. But in order to do it, I think funds and capital also have to really innovate and think about how do they position and structure themselves kind of under this new era of CFIUS. And so I think there's a lot of nuance that needs to happen. And, we've been working, I've been working in cross-border for over 6 years, and this is really a time in which your relationships really matter and the trust really matters, because as much as you talk about regulatory and CFIUS, and these are very important, but at the end of the day, it is how do you garner trust with the founders you want to build that trust with, and how do you give them that sense of security in this macro environment? So for me, I've really doubled down on that, thinking around those personal relationships. And then, James talked a lot about the development of enterprise and frontier tech in China. And I think it's been interesting because in the past, corporate VCs have also invested in the frontier tech of the US. And with that capital kind of retreating from Silicon Valley, I think Silicon Valley also has to think about its frontier tech ecosystem as well. And so I've seen kind of interesting developments in the frontier tech ecosystem of both countries in different ways.
Okay, yeah, I just saw my own home state of Ohio had a big IPO last week by a new firm that moved in, actually from Sequoia. 2 partners left Sequoia to form Drive Capital in Columbus, in my neck of the woods, or my hometown area. And they just got their first big IPO on NASDAQ. So I guess things are heating up a little bit all over. So, I mean, I always thought of Columbus as Cowtown, so I don't think it's Cowtown anymore. Maybe it's becoming Tech Town, like Austin, right? But anyhow, sorry to
I also grew up in Ohio, so I share the pride. I grew up by Akron, so.
Oh, okay. Well, I guess you've been reading about Lordstown Motors then, the new electric pickup.
Right.
That's coming out of that area. Yeah, so anyhow, okay. We got to get back to Asia and Silicon Valley. So Edith, I know we want your expertise in here.
So Reuters actually put up a really good article this morning to contrast like some of the activities. So it's actually quite interesting. And when I sort of look at cross-border, there's obviously investment strategy. There's your company in terms of operating in both sides, and then exit. But I think what's really interesting is they were contrasting about M&A So on the exit side of things. So in 2016, there's over 61 billion in terms of transaction for M&A versus last year's 1.86 billion. That is a huge drop. And then in terms of Chinese VCs, 2016, about 15.7 billion. And then this year, as of October, about 6.7 billion. It's dropped a lot more. And then direct investment also dropped 90%. So I think in terms of investment, China from the US is definitely not doing that well. And then, but the other way around, I think is not necessarily the case. In fact, I was sort of studying around, there's a lot of like huge banks actually get licenses this year, including even PayPal did an acquisition in China, now operating in China. And then if you think about, the Sequoia Lightspeed, it's been in China for so long. So in that sense, I think the US side or US brand name VC fund to continue in China, there's no change there. Yeah. But I do think M&A is a huge change. IPO, the sentiment in terms of getting listing, who knows what's going to happen to N Group, but it's disappointing that they don't list in the US to begin with a lot of the public investors, but I guess they're not even happening in China now. So who knows what's going to happen. But more and more Chinese companies are actually thinking, no, you don't necessarily need to get listed in the US. In the China Internet Report this year, we actually did a study of the top 20 internet platform in China. The only one that is only listed in the US is Pinduoduo. Everybody else, Tencent always in Hong Kong, and like Meituan, Ali now, well, who knows? A lot of these guys are all actually dual listing or only listed, not in the US at all. So I think that will continue to be a trend. Yeah, I think so. Okay, let me ask another question on this decoupling trend. It's who wins, who loses in decoupling? Does China have an advantage if this decoupling goes through and China develops its own technology standards more and more, its own VC market more and more? Does China have an advantage with decoupling or not? Let me ask, and where does Hong Kong fit into this? Let's see, who, raise your hand, whoever wants to address that question. Okay, I see Duncan. Okay, Duncan.
Actually, I can combine the two questions you have.
Okay,
I mean,
good.
one and about what positioning is going to be together. I think to summarize what some of the other speakers mentioned, the cross-border impact, I think I can summarize it in 4 fronts. One, Hong Kong or China capital investing outside. Our previous one, we invest in Israel and North America quite a lot. And, we've done a lot of, it's fully vested, but I mean, we're helping the companies, the portfolio companies raise further funds. I think definitely, I like Jeffrey, how he puts it, frictions increase in getting the deal done. So a lot of further rounds from Israel and from the US company that we raised it, when we talk about bringing in China investors or Hong Kong investors, actually, there are more complications. And it also depends on who else is, on the cap table, who are the other investors and whether they have, government-related connections. And there are actually more concerns on that front, for money going from east to west. And for money raising in Hong Kong, I talked to quite a lot of funds that I know that have US LPs, endowment funds and stuff. I think most of them are not really impacted since, the China-US friction. They still raise the money they need, and, as long as they perform well. So from money raising for funds here, it's not a big problem. On the startup side, the startups, US and China, the good thing is they are both very big markets. So a lot of the local startups in US and China, predominantly they just focus on their own market. Going cross-border is always a second tier, aim for them, target. So for now, I think companies in China and companies in US startups, they would just might as well, focus in building up, the sales in the local market. That would be the priority. But for Hong Kong startups, they have to choose because the Hong Kong market is really small. So most of the startup, they do the POC, the early first contract in Hong Kong, and then what they have to do, they have to choose where they want to go. So they have to decide whether this is a US product or this is a China product. They have to choose where they go to expand the market. Otherwise, they won't go anywhere. So from the startup
So
side,
what's the most common route there? If they have to choose, what's the most common route?
most of them still have to be, they will choose either going to mainland or they will go to Southeast Asia. I think these are the two biggest choice that they have for now. It's not easy for them to bridge all the way to the US, or they might have just started in US all the way. They won't be starting the company here. So most of them, they will either go to expand in mainland or Southeast Asia. That's the trend. And most of the unicorns that we have now, I think Charles mentioned 8. 7 of them have more than 90% business coming in from mainland, and one of them is actually having a Southeast Asia focus. So this is actually the split from the startup side. And the last is about talents. Talents, I talked to some youth professors for the last 2 days over lunch and stuff. They're seeing actually quite a lot of applicants coming into the universities in Hong Kong, and a lot of Chinese professors in the US thinking about coming back to get a job in Hong Kong. So I mean, I don't know how the trend will stay. This trend will stay for how long, but this is actually what we see now. So you talk about what is the benefit of Hong Kong, and I mean, definitely, I think mainland China will spend a lot of money in deep tech and fundamental research, and Hong Kong still have several universities, and despite the unrest we have, I think there's still a lot we can still be brand as local product for mainland. So a lot of the R&D work and attraction of talents, hopefully we might benefit and create more companies like SenseTime, DJI that we have in the past 10-15 years.
Right. Yeah, you just brought up 2 great companies from Hong Kong with the Hong Kong roots. Anyhow, I'd like to know, how are you VCs advising your portfolio companies to deal with this changing world today in a post-COVID or current COVID situation? Are there any common solutions that you can, or strategies that you're seeing emerging to help startups weather the storm? Raise your hand, whoever wants to answer. Okay, James.
Maybe just a quick comment. I think in Q1 and Q2, the advice we give to the portfolio companies are really to watch out for your cash flow and remaining cash balance, and make sure you have at least 6 months cash reserve for your runway, and raise funding earlier than you anticipated, and also cut cost. And as it's really uncertain how long this COVID will last in China, right? So we actually have do a lot of work for some of the companies for online travel related. They were really affected. So we actually have to work with the banks and provide some working capital loans for the companies.
Right.
So those are crunch times. I think right now things have changed quite a bit. So we just keep reminding the portfolios, and things are turning better, but don't try to raise funding when you have some founders, and they will say, hey, our business is doing well, we want to maximize the valuation, and let's wait a little bit longer to raise it, and we can get better deals. And we advise them that if there's a good investor and want to invest at a reasonable valuation, take it. Right. Okay. And so the other part of advice was bring more the business online. There are hybrid models for a lot of the portfolios, but if we can leverage the online tools and the online part of the business to really maximize it, because you never know when the second wave, when it's going to hit. And mostly the offline part of the business is usually affected the most. So that's accelerating a lot of the SaaS adoptions, and that which is I think is helpful for the company.
Okay. Let me bring in a question from our audience here. Tyler has a question from Nestle, actually, and he's wondering about, are any of you VCs seeing a movement of innovation towards solving more societal problems? And we'll just have one person answer because we're going to run out of time otherwise. So raise your hand if you want to answer about the societal problem. Okay, James.
Well, so the two deals we recently did, I personally worked on. One is the plant-based meat company.
Yeah.
And certainly it's early in China, but we have seen Impossible Foods sales really significantly grow during the COVID in the US. And we think that definitely has a lot of benefits for the society. So we picked really the leader in China, and we invested. Another company is actually, we haven't announced it, but I can mention is there are multiple Tesla's equivalent startups, and Neil, Xiaopeng, Li Yang, and these are battery-based passenger cars companies, and went public in the US, and we invested in Xiaopeng. And we recently invested a company, it's battery-based trucks for commercial use. And later on will be heavy trucks with fuel cell based, the big trucks as well. A very experienced team, and it's very early. This is a Series A we did, but we think the environmental impact, really we need to do something, and the policies changes, and it's really getting more favorable. So a lot of these societal impact is part of our consideration what to do. So yeah.
That's good. That's good to hear. There's another question here from Brad Armstrong, and I think this is probably directed to Jeff Chi, because it's bringing in Southeast Asia and Singapore. So he wants to know, are you currently seeing more investments in China-based companies from Singapore-based investors? Jeff?
That's an interesting one. Not really. I'm sure there are quite a few investors based out of Singapore, Southeast Asia, looking at the Chinese market, but I think the reverse is actually more dominant.
Yeah.
The Chinese investors are investing in Southeast Asia. I had a comment to that earlier question on moving innovation in a direction, and you know, Vickers being a deep tech fund, we tend to try to avoid market risk by investing in things that solve big problems. And so as a result, when you solve big problems, there are very often sort of impact and societal benefits. VCs in US, China, I think it's a catching on trend on both sides of the equation. But I think where the real effort comes is actually from the limited partners out of Europe. So they have a very, very firm agenda. And on the private wealth side, I think the millennials who are coming into their family offices have a very specific view as to wanting to solve very specific problems and looking for investments that would help them solve that problem. So it is becoming very, very much of a thing, and I'm encouraged by that.
Okay, that's good. Thank you very much for the questions from the audience, and thank you to our VC panelists. And let's move on to our next part, which is also VC related. And I'm going to share the screen here and bring up. Don't go away, VCs. Stay here, because our next part is we usually do this in person in Hong Kong, and you know, we do a nice toast and all that. But today we are going to be doing this virtually. So James, me from Lightspeed China, we're naming James as our top VC of the year 2020. So a year to remember. And of course, James, I've put here some of the milestones of his career, which you can see here. These IPOs, several of them in the past couple of years, including Pinduoduo, Meituan, and Rong 360 at PP Dai. And, you know, James' background as an early investor at Google and helping Google China grow and running Google Ventures and investing in Baidu early on. It all adds up to, it keeps adding up. Each year, James adds more to this. Currently managing $1.9 billion assets under management under Lightspeed China Partners, which split off from Lightspeed Venture Partners in Silicon Valley back in 2011. It just seems like yesterday to me, but it was 2011. And James, we would like to acknowledge your leadership of the industry with all of this progress. And so, James, let's give James a toast and a thumbs up. And since it's afternoon my time,
Thank you.
let's toast James. James, thank you very much. Would you like to add it? You know, I know you were a big character in my book, Tech Titans, but would you like to add anything to what I just said?
Well, thank you so much, Rebecca. This is quite an honor. I think we were reflecting in 2020, which is a year we want to put behind us. Yeah. But I think we are at a juncture. I think it's challenging, but also I feel that we were lucky to be able to still be part of this venture industry that's helping inspirational founders to create really big values and despite all the challenges we have to face. So there's a lot of work being done by the Lightspeed China teams and really appreciate this award.
Okay.
Thank you.
Well, thank you. Thank you, James. A toast to James.
Thank you.
All right. Moving on to another fun aspect of our program today. I'm going to launch our polling. Okay, our polling is, I hope you can all see it on the screen here. This is totally anonymous and just meant for fun. So we can kind of just get a read on where everybody's thinking. How much change do you expect in US-China relations in 2021? Not much, some, a lot. What's your outlook for 2021? Optimistic, negative, neutral? What tech sector is leading change the most? I should have put biotech in here. So forgive me for not putting biotech in. Will China surpass, oh my God. Will China surpass the Western world in tech innovation? If yes, by when? Boy, somebody is really optimistic about China. And then what's your read on global venture capital? Too much money chasing too few deals, or the reverse? Okay, let's see everybody weigh in here. Okay, looks like some change is going to win. Your outlook is positive. Okay, which tech sector? It looks like AI wins. Yeah, AI wins by a long shot. Will China surpass the world in tech? Okay, we have kind of a China-centric crowd here, so I'm not surprised by that. 68%. If yes, by when? 2025. Most of you think by 2025. Okay, that's not that long from now. Okay. Now, too much money, too much venture chasing deals. Okay, it's too little venture money for deals. Okay, well, I know we have a lot of entrepreneurs in our audience, so I imagine they have swayed that vote. But all right, well, has everyone voted? All right, well, we're going to end the polling because otherwise we'll lose track of time here. Thank you very much for participating in our poll. And I'm going to move on now, moving swiftly along to our, we did our poll, to our pitches. And we have two people pitching from Hong Kong. Both of them happen to be housed at Cyberport, and both of them have a Hong Kong angle. And it's interesting, this was not planned, but they both happen to be in something to do with shipping or freighting. So Stefan, I'm going to stop sharing, and you are going to share your slides quickly with us, and then we'll go on to Oksana. Okay, Stefan, it's all yours. Go ahead.
Great, great. Rebecca, can you hear me?
Yes.
Perfect. Okay. Share. All right, fantastic. Hi, everybody. My name is Stefan. I'm the co-founder and CTO of Book Air Freight. Book Air Freight is a B2B air freight marketplace tailored for e-commerce companies. Our platform saves customers time and money on their shipping costs. We've only been around for 2 years, but it's been an incredibly exciting journey so far. We've reached $7 million of GMV this year, and that represents 1,200% year-over-year growth. But as a founder, what I'm really proud of is that customers come back to us time and time again. 89% of our revenue is coming in from repeat customers, and we're seeing a 40% referral rate. Now you might be wondering, why are people coming to Book Air Freight versus going to traditional couriers like DHL or Kunago? So to answer that question, let's meet our customer, Eugene. He is the founder and CEO of Lumos Helmets, a very, very cool product. They manufacture in China and sell across the world through Amazon and also Apple stores. And so again, why is Lumos and why is Eugene coming over to Book Air Freight? It has to do with volume. Shipping works as a wholesale industry. The more volume you have, the better the rates you get. And for small e-commerce companies like Lumos, they just don't have the volume to get competitive rates from these large couriers. So they need to go to local suppliers for every country they want to ship to. But these suppliers work really low tech. So it takes days to generate a quote, and the pricing is not very competitive. Working with Book Air Freight, Lumos gets one contact for every country they're shipping out to. And because we work directly with wholesale suppliers, we can save them 20% on their shipping costs. This was an absolute game changer in terms of time saved and money saved for Lumos. E-commerce companies love working with us because we simplify shipping and we've got value add services. For any business, saving money and time is top of mind. And to that extent, our platform saves customers 72 hours that they would otherwise be spent waiting for a quote and 20% on their shipping costs. And we believe that our customers should focus on growing their business and servicing their customers, not worried about the status of their shipments. And to that extent, we have late delivery compensation. And for goods valued up to $10,000, we insure them for free. And moving on in the future, we've been providing e-commerce financing for our customers to help them grow even faster. We've raised $100,000 from the Betatron Accelerator in Hong Kong in 2019. And while we're privileged right now, because our operating costs actually cover our current expenses, our revenue covers our current expenses. So we're not currently raising, but we will be looking to doing that in the next year.
Okay, well, thank you, Stefan. Really good presentation.
Great,
and
thank you so much.
There's Stefan's contact information in case anyone is interested. And let's move on to Oksana. Oksana, let's bring you on screen now.
Great, thanks so much.
Thank you so much, Stefan.
Thank you.
And Oksana, you can share your slide now. Shipnext. Okay, you can go ahead, Oksana. All right. We're viewing your screen, but we're not hearing you. So, okay. Oksana, go ahead. Well, unfortunately, I think we have to move on, and we'll have to come back to Oksana toward the end of the program. Let's move on to our next part of our program, which is the IPOs. Yeah, definitely a very hot topic today. And as always, we have here today discussing with us Michael Chan, Head of International Issuer Services from the Hong Kong Stock Exchange, and Irene Chiu from KPMG. Thank you very much. And look, without further ado, why don't I ask you the burning question that's on everyone's mind? What is going on with Ant? And any insights on this? Is this something that is going to be an indicator, a predictor of other future IPOs?
So hi, Rebecca, can you hear me okay?
Yes, I hear you just fine.
All right. So good question, sensitive question. Unfortunately, we cannot comment too much on this case, but what we can say is that, our pipeline, for these homecoming cases, for these new tech cases coming in from the region and from overseas, continues and remains strong. And just from our past experience, the market will adapt and adjust and hopefully be back on track soon. So unfortunately, that's all I can say for now on this case.
Okay, Irene, would you like to comment further?
Yeah, I think apologies, I have to say the same thing like Michael. I can't really comment on specific case, and also the news really just came out last night. I think the market probably and us is just also trying to find out a bit more. So probably, check out the news in the next couple of days. I'm sure more will surface.
Oh yeah, well, look, I know the Hong Kong Stock Exchange has been on a real roll for the past couple of years. And I think, Michael, you had some slides about that as well. But could you talk us through about why has Hong Kong has become this leading exchange? What's been the drivers of Hong Kong's IPO growth? And do you think that that's going to continue?
Yeah, so let me, set the scene for sort of talking more about, where we are at now. And, as we are all seeing, Asia is experiencing such a rapid acceleration, of growth from the tech innovation and adoption. For us, in response to that at the HKEX, we refreshed our listing regime 2 years ago, back in 2018, which created or offer or create, setting a platform that offer more opportunity for more of these emerging and innovative companies to list on the Hong Kong market. So that was really a momentum building since back in 2018. And since then, we've really welcomed over 100 new economy or tech companies, as you mentioned, in terms of that momentum. And then as at August of this year, new economy companies had raised over 403 billion Hong Kong dollars as part of their IPO under this new regime. Now, so for new economy companies, it is already really making up 26% of all the Hong Kong's listed market cap, and by numbers, it's only at around 4%. So on average, these new companies and tech companies are trading, already 5 times more than traditional sector companies. So this is again, quite a strong indicator from our perspective of the market's appetite shift for these tech companies. And so, we've talked about some of the names, Alibaba, Meituan, Xiaomi, Razer, Zhong'an, Good Doctor, Waymo Inc., in different variety of subsectors in tech and of course in healthcare as well, in biotech as well. So that's, a momentum that we've been building, since 2028, if we are looking at from a regulation and regimes point of view. Obviously, the market, and we've been doing a lot of work even pre-2018 to slowly build that pieces into what we have today. And another sort of noteworthy sort of a milestone that we talked about, Rebecca, is really the introduction of the new Hang Seng Tax. This really signals, how relevant and important tech companies and new economy stocks have become in our market and in the region. And so this new Hang Seng Tech Index currently tracks the 30 largest, Hong Kong listed, technology companies, and has been very well received by the market. And there have already been several new tech track funds, listed since August, and it's really setting a very exciting trend. So that's been the scene, and that's where we are right now, because you've asked us, what's happening and what's going on. But I'll pause here to have, maybe Irene add to it before I move on to what we're seeing.
Sure. Yeah, Irene?
Yeah, sure. I think Michael talked about the regulatory regime, which really created the right platform for we call the emerging innovative companies or new economy companies to really have an extra channel to raise fund, and also for an investor to exit. And I think on top of it, I would also add that we've heard so much about the VC scene in China. I think that continue sort of gaining momentum in many of the tech sectors in China are also feeding the pipeline of innovative companies that are increasingly looking at sort of raising funds from international investors and becoming a listed company in the international market. So, I mean, Hong Kong ideally does provide that platform. And I would also add to that is there is a market need. I mean, the fact that the Hong Kong Exchange introduced this changes in 2018 is in response to the fact that there is a great need for more innovative products, and especially in life sciences industry. And there are a lot more biotech companies are coming up and needing funding. And so it's just a natural response, and that reflects the demand in the Greater China market, being the second largest in terms of pharmaceutical and biotech products.
Right. So I know neither one of you can really talk specifically about the Ant news today, but I think just for our audience and for some clarity, I would like to know if you think that this is going to be a game changer. I mean, what are you hearing? I mean, is this going to be a game changer? Is this just going to settle down and be normal again, or what? Game changer or normal?
Maybe I'll give it a shot, Michael. So I think it will normalize. It probably, this is something to do with potentially changes in the regulatory front in China when it comes to financial services. So we can't say for sure exactly the changes, but if we look at in the long run, China is not going to move back on digital payments. And you got a large amount of SMEs are transacting through online payments and enabling e-commerce, enabling distribution of services and products through the country. So I still think that this is the way to go. I guess it's just probably something to do with the business model that need to be revisited. But I also think that the success of Ant, I still think this is going to be a very successful case. It's going to help the other fintech related businesses to also come onto the public market.
Right. Okay. So one aspect of this is the growth of the Southeast Asian tech companies and where they might go public. How do you look at that, Irene? How do you evaluate their prospects and where they should list?
Right. When it comes to where to list, and there are many different factors, and usually it comes down to probably 4, if I would have to summarize, is to do with their what market they're currently operating and where they want to move to, and where the growth potential is.
Mm-hmm.
Second is to do with their current investors' composition and also the kind of investor they like to attract. Third would be about valuation, right? Where you can actually raise money at the value that you really want and at a reasonable level. And the last was to do with compliance related risk or cost. And if you ask me and Michael, we certainly want all these unicorns in Asia Pacific or Asia in general to consider Hong Kong as a good platform. There are different discussions and inquiries, I mean, over the past 2 years. So we've had some success, like Michael mentioned about Razer from Singapore. So we hope that with the bigger pool of tech company, innovative company we have in Hong Kong, it helps attract the other ones. And I mean, Michael didn't mention that is like, despite all the turbulence that Hong Kong has experienced last year and continue on this year, we haven't had much issue in terms of raising money. So Hong Kong is incredibly resilient when it comes to bringing in institutional investors and still sort of provide that transparency and the trust that investor need.
Okay.
Michael, feel free to chime in.
Michael, feel free to jump in.
Sure. Thanks, Irene. You know, Irene has really, mentioned a lot of the, good points on that. But what we can say, obviously, is, to add to, some of these, thinkings, the commonality for a lot of these conversations with these tech companies is that there's no one size fits all, and there's, obviously on a case-by-case basis, but that commonality is really that nexus factor that will complement their strategy. So, when they do choose a listing venue like, Hong Kong, they will line up all these sort of factors that, best complement these strategies.
Right. So I remember, covering in the Silicon Dragon era, maybe we're beyond that now, but in 2005, 6, 7, 8, that like everyone, it was the NASDAQ IPO. That's the trophy. So the NASDAQ IPO is no longer the trophy for a tech startup?
No, for us, I think as our market has grown and has, added different functionalities, so a lot of these companies now are choosing, and if all things are equal size valuation, they would definitely choose a market, or the top of the agenda is which market will serve and complement my strategy in terms of how that will benefit my my market, my customers, my peers, and my brand. So if you're talking about Southeast Asia and the techs coming from Southeast Asia and Asia in general, they would prefer a market or function in market and gain and raise capital for a market that's in the same time zone, preferably if all else is the same in terms of the liquidity, in terms of equity, and in terms of total investor base. So these are usually now the shift in terms of that conversation. And,
Let me bring in a question from the audience before we run out of time. Do you see SPACs or direct listings coming to Hong Kong? Lucy, thank you for the question. You see SPACs, direct listings coming to Hong Kong?
We've seen SPACs pop up back and forth, in past 10, 15 years. For me, I've been with the exchange for 14 plus years, half that time as a regulator, and then now on the market development side. And it really functions as an option for obviously the potential issuers. So for us, you know, we're definitely tracking it with interest, but you know, we'll see, because for us, you know, always the front door is always most attractive. So the IPOs are usually the more attractive sort of options in this region.
Okay, all right, thank you. Well, unfortunately, we do have to move along now. So I'd like to thank Michael Chan from the Hong Kong Stock Exchange and KPMG, Irene Chiu from KPMG. Thank you very much for sharing your thoughts here today. And thank you, round of applause.
Thank you.
Okay, and moving on to our last little bit here to wrap up. And thank you again, Michael and Irene. And thank you to KPMG and Cyberport and Invest Hong Kong for your support in pulling together this program. And I would like to announce that our next couple of shows, our Ask a VC Anything series, are coming up. The next one is from Israel, Our Crowd. And then we have David Lamb from Atlantic Bridge, who's very active between the European market and Silicon Valley. And then we have Nazar Yassin from Rise Capital. He's very much into emerging markets. So those shows are coming up and they're a lot of fun. And so I urge you to go to Silicon Dragon Ventures and check them out. In January, we have two great tech icons who are going to be on our show. John Chambers from Cisco. He's now a venture capitalist. And excuse me, Brad Smith from Intuit. So please check out our website for those. Thank you again for joining us. And we'll see you online next time. Take care, everyone. Thank you again.
Thank you.
Thank you again.
Thank you, Rebecca.
All right, thank you. Thank you to Invest Hong Kong, Cyberport, KPMG for your support, and all of our speakers and all of our attendees. Okay, good night. I'm going to go see who's winning. I'm going to go see who's winning. Okay, thank you, Charles.
Thank you very much, Rebecca. Thank you all.
Okay, all right.
Thank you, Charles. Thank you, Michael.
Okay, bye now, everyone.
Bye.